Tony, good to see you this morning. We've seen just, I guess, modest bounces relative to the recent losses in areas like, cloud software, the kind of pure plays on speculative emerging tech that had such high valuations about a year ago. I guess you're arguing that perhaps we shouldn't necessarily believe a recovery is there, more valuation adjustment necessary?
Well, good morning. Thanks for having me. I do think that we've given back a lot in terms of valuation. So we look at technology and valuation groups. And so the 20% most expensive technology stocks, they were trading on average at 21 times sales about a year ago. They're now trading at about 9.5 times sales. So they've come in tremendously. But 9.5 times sales is still quite high versus history. If we look at that cohort of, again, the 20% most expensive tech stocks, they typically traded around 6 or 7 times sales. So, encouragingly, valuations have come in. Expectations for these stocks in terms of their growth rates have also come in. But 95% of the top 20% most expensive stocks are still unprofitable. And they're trading at almost 10 times sales, which is still high. So we may have some more give back, but we've certainly gone a lot of the way so far.
Would that imply, Tony, that you think it's still time to kind of migrate toward the higher quality names within tech? I mean, if I look at the NASDAQ 100, for example, it's a similar story where overall valuations have come in well off the highs, but they also are, still higher than pre-pandemic. So it's not as if they look, kind of outright cheap relative to their history.
No, absolutely. I mean, technology is still trading at about a 40% premium to the broader market. That's higher than historically what tech has traded at. So there's still overall elevated valuation within tech. What is interesting to us is a lot of people say, oh, we've had this growth to value rotation. Really what we've had is a meltdown in the most expensive tech stocks and in the growthiest, highest expectation stocks. But we haven't really had a great run in the cheap tech stocks. Fundamentals look pretty good for them. Valuations look pretty good. But they only modestly outperformed last year, and they've only modestly outperformed this year. So we do have a tilt towards high-quality, less expensive technology names to fare well through the remainder of this year. Again, the high end may continue to give up some. But I think this characterization that we've had a rotation of value is only half true. We've had a come down in very expensive tech, but we haven't had a big surge in inexpensive, high quality tech. And we think there are names there that investors can do well with.